Hey, what's up, guys? It's Jamie. I'm on my way home. It was a very slow day today. I want to talk on my way home about selling covered calls and selling put options. And I don't have any graphs to show you today. And even if I did, I don't know how helpful it would be. There is so much information. I actually was on YouTube and I was searching in YouTube for videos about anything really, but about put options, selling put options, buying or selling covered calls, right? And there is so much information for you to go and watch. So with graphic illustrations, with really great diagrams and different examples and scenarios of things going good and bad, so I don't need to do that. This is not why you would come here. This is a conversation about some positions that I've taken, of many, and how they've worked out or not worked out for me, and that's all this is. It's just a conversation. One of the things I disagree with some of the folks I listen to, and there's a lot of folks that offer expert advice or at least what they call as expert advice, and some of their portfolios are pretty big. Some aren't. Some have their own style of how they show you, but they do offer you some pretty good examples on how it works. What I wanted to talk about was really if you are going to sell a put, okay? Recently, I had taken a position with Coinbase. Now, Coinbase a week ago was trading around 90 in the 90s. It went as high, I think, as $115, $116 a share. I know that has something to do with BlackRock, partnering with them for Bitcoin, which BlackRock is if you are living under a rock and you don't know what BlackRock is, it is the largest asset managing firms in the world that I'm aware of, anyway. And I think they manage somewhere between $9 trillion, so I think close to $10 trillion. And at one point, I think it was more than that, maybe 11. Anyway, trillions of dollars. That blows my mind. I have no idea. I haven't researched BlackRock, but that's not what we're talking about today. I think it's probably some type of signal that for Bitcoin, for the cryptocurrency market, by them doing that. But we'll see. Now, the other thing that's coming into play, not to get away from what I want to talk about, is what's going on in China, right? We already got the stuff going on in Ukraine, and now we have China, which is about to, when I'm reading or listening to, not just reading and listening to, go through a massive housing market, economic crash, similar to what we went through, but worse, in 2008 here in the U.S. Now, I've only learned about this in the last week. I've saw some headlines, but sometimes I don't take the headlines to heart because I'm never really sure with what's fake news or what's being over exaggerated, embellished to grab your attention. But it seems like that is happening, and I'm sure there will be a ripple effect to the world if that is what happens, right, over China. They got over a billion people, billion 2, 3, 4 million people. So obviously that has to have some impact on the world, right? The trade, right, and the economy, fair trade, and all that stuff that's going on. I mean, it's got to affect everybody. It has to. They produce so much stuff. So as I bought Coinbase and I saw it drop from 115, 116, from 90s, in the low 90s, between 90 and 95. I think when I got in, it was like around 92 to 95, in that range. I had put a put option. I sold a put option, one contract, as well as I was buying some shares afterwards. at $90. Well, I can tell you I got assigned those shares, those 100 shares at $90. But because I had bought more shares, because it dropped from basically 93 all the way down to 71, 72, literally overnight, right? It just dropped. And I knew that I was going to get those shares. I collected a premium in this case of $385 in that scenario because my contract expired in 1 week. It expired Friday, which just passed. It's August 20th. As I do this, my contract expired August 19th. So I got assigned the 200 shares. I had bought 100 shares when it was in the low 70s, and it averaged me out around $83 per share for 200 shares. Okay. Now, the bad news is I'm underwater, right? A couple grand right from the get-go. So the $385 helps offset the loss of the value of the stock that's not locked in, but the value is negative $2,000. It's negative $2,200. Now, I could sell it. I could have sold it. I mean, I can't sell it until Monday morning. But if I sold it, then I'd lock in my losses, and I would factor in the $385. And maybe that would be the best thing. Sometimes it's the best thing because I'm not sure what's coming. Like, is it going to drop another leg? Because the next leg down to me is, in this case, for Coinbase, it's in the 60s. But in the same token, there's a lot of volatility. So it could go back up into the 90s and the 100s. Okay, but I don't know. I'm not sure what's going to happen with all the uncertainty. I know that there's always some manipulation, in my opinion. There's always, the institutional trader versus the retail trader that kind of knows, what the dumb money is going to do versus the smart money, and how they're going to benefit from that. So what I have learned over the past few years is usually when I'm patient, things work out, but that's where you become a bag holder and you're stuck holding some shares of any stock. But if you have a 401k or a Roth IRA or whatever portfolio you have with stocks, if it's down 5, 10, 20% or more, then it's down anyway. There's nothing you can really do about the value of those stocks across the board. So even if it pops a couple days or a week, but we're overall in a downtrend or a bear market, you're going to just most likely ride it out. You're not going to cash in your 401k. You probably, hopefully, won't lock in your losses because you're selling at the bottom. Coinbase, on that relative strength index, on most of those, whether it's an hour, 2 hour, 3 hour, 4 hour chart, is well below or pretty close, and some, depending on what you're looking at on candles, below the RSI of 30, which usually it just shows this up and down, like it's the 30 or a little below the 30. I mean, it's gone as low as 20 and 15, below the 30. But generally it goes back up, and when it does go up, it pretty much tops out around the 70 or over the 70. So I don't think I would be selling my 200 shares at the bottom at $72 a share. I am wagering that it will go back up into the 80s and possibly 90s over the coming days and weeks. Yet to be seen, yet to be determined. I could be completely wrong. I'm not a financial advisor, and certainly I could be wrong. But that is how it's worked out for me many, many, many times over, where people panic. I've done it in the past. Oh, it's going down, it's down good, but it only usually goes so far before it kind of bounces back up again. And if I had sold every time I panicked and every time I saw it drop, I would be down tens and tens of thousands of dollars. But usually it's just a patience game, in my humble opinion. I will get feedback. I will read feedback, and then I'll talk to people that are into stocks, options, and cryptocurrencies to get their sentiment and how they feel, just for conversation. And really, that's the whole point of this video. But if you own the stock and you owned it for 90 in the first place and it dropped to 72, you're still underwater anyway. You just don't have the premium. But the risk is if you get assigned the shares and it drops from in this case 90 to 70 or 70 to 60 or all the way down to 40, you're gonna if you need the money, if you need to sell that, you're gonna kind of sustain some losses if you need the money, versus if you're like, I got time, I got weeks and months or years, and then it might not matter because it's not urgent that you unload that, or you have the stomach to take the volatility, because when everything is green, regardless of what way you're playing it, everyone's happy. Oh man, I'm making money. But if you didn't lock in that money when it was green, it a lot of times it goes into the red again, and then you lose your loss, you lose your gains. So what I like about selling options, in this case selling puts, is I can collect those premiums. But the downside, this is what I wanted to really talk about, was when you do get assigned those shares, and if the shares have dropped down substantially enough, the premiums as well go down. So if you've lost, like with the ones that I'm talking about, I am negative $2,000 overall, $2,000 today, before Monday. Now, if it drops lower, I could be down $3,000 or $4,000 in value, in evaluation of the shares that I hold. So selling those premiums, even if I sell premiums, the premiums are probably going to change. There's only so much of a spread between what the valuation of the stock is to how far it's got to go for me to break even or close to even, and then the strike price in turn gets skinnier and skinnier as that spread goes up or down. So in other words, if I own it for 90, or in this case 83, and it's at 73, if it goes to 63 and I still got to sell it for 83 at a strike price to get even, the premium might go from paying $200 or $300 to $50 to $100 at that spread. So it's tougher for me to make up $2,000 or $3,000, with the premiums being so small. And then there's always the risk that the spread gets wider. Maybe it drops even lower. Now again, this can apply to any stock, and whatever the value is, like depending how much percentage it changes. But if it drops 10, 20, 30%, then it's going to be really difficult for you to make up that valuation in the meantime. So in other words, if the premium was 500 to 1,000, I have 200 shares, so I sell 2 contracts and I pick up $1,000 to $2,000, then I could sell it at a loss and be okay with it, because I'm like, I made it up in premiums, so I'm okay with it. But sometimes you're chasing this cycle, and you may not get to that number. It may be more, you could be churning that money. It's better to take the losses in some cases and move on, right? I think it's case to case, but sometimes it might be better just to say, you know what, I don't want to run the risk of it going down lower, and I don't think I'm going to make enough up in the premium, because this is not a company I want to hold for 5 years. So I'm going to go ahead and take my losses. That may be a better strategy. I'm not telling you to do that, and I'm not saying I'm doing that here. I'm just giving you a verbal illustration. So that is one of the downsides to me of selling puts. Covered calls, I think it's a little different, because if you own 100 shares already, or you own a contract that's well below the strike price, then you can sell your shares, right? Like if you have 100 shares or more, 200, 300, 400 shares, or thousands of shares, you could sell those contracts. You could sell those contracts for above your share price, right? Like, so if you own it for, let's say it's Coinbase again. I'm just using Coinbase as an illustration. If you own Coinbase for $83 a share, and you're like, hey, I'm okay with selling it for $85 or $86 or $90, whatever it is. And if you could make $100 or $200 or $300 a week selling that contract or contracts and collecting those premiums, even if you have to sell those shares, you're not losing money. You got the premium and you got the spread in the profit, whether it was at what your cost was or above it. Then you're good. Then you're going to make money, and it's going to be to your benefit, for that to happen. So I don't really see the downside as much when you own the shares, depending what you own them for and where the price action is, where it's valued at the time. Now, if I own the stock for 83 and I own them, and I was going to own them anyway, like Tesla. If I'm going to own 300 shares of Tesla, then I might say, I don't care if I ever sell those things. Anything I make from it during the volatility of its up and down, using Tesla as an example, I'm okay with, because I want to own Tesla anyway for 5-10 years. If anything, I want to keep adding shares. So that to me is a little bit different, because when you own the shares and you want to have long-term ownership, you most likely don't want to sell the shares. So I don't want it to hit the strike price, or the strike price. Like, meaning if I own it for 83 and I'm like, I don't want it to hit 90. I hope it doesn't. In fact, I bought contracts back because it was hitting the number, and I'm like, I want to buy it back. I don't want to lose my shares, because I own them for so cheap that I'm like, I can never own them that low again. It's not worth selling it. Okay, but if you have more than 100 shares, if you have 200 or 300 or 1,000 or 5,000, whatever it is, whatever the stock is, you might be okay losing a couple contracts, or a couple hundred shares, or whatever it is. But you're like, I still want to retain this core ownership of whatever company it is. One thing I'll be curious to is, to get back into the Chinese thing, is I wonder if I should buy some Chinese stocks. They're going to be discounted, such as NIO or Alibaba, for example. But anyway, I think that you can definitely benefit from selling covered calls and selling puts, because you are going to collect premiums. The downside to the puts is that you might not want to own the company. You might say, I don't want to own it at $90. I don't want to own it at whatever the price is. I'm hoping it doesn't hit that price, because I don't want to own it. And you have the money to do it. You got to have the money or the shares. If you got to own 100 shares, if you said, I want to sell a put, and you're basically using collateral, saying like, okay, I'm going to buy it for 80, and I already own it for 83. Then I think you either got to own the shares, or you just got to buy them. I'm pretty sure you just got to buy them. But I'm not an expert. I'm just sharing with what I've experienced so far. But anyway, let me know what you think. That's what I've done pretty well with overall. For the most part, I've had a lot of success selling those contracts and collecting those premiums, and it's worked out pretty well for me in the grand scheme of things. But there is risks. It's not like, there's no risks. You can still get stuck with some of these shares that you don't want to own. All right, I will talk to you guys later. Have a good one. See you next time.